Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
All right, so let's dive into this M&A landscape report we have.
Yeah.
Specifically for the, that $2 to $50 million range businesses.
Right.
That lower middle market.
Yeah.
We've got this report. The new M&A landscape, proprietary deal flow and platform acquisitions in the lower middle market.
Yeah.
And it's really, really interesting, especially with the Fed cutting interest rates.
Yeah.
For the first time in 4 years.
First time in a while.
It seems like there's some opportunity.
For sure.
For buyers and sellers. What are your initial thoughts on that?
Yeah, well, it's pretty fascinating because you're seeing these huge mega deals kind of fall apart and make headlines for that. But this lower middle market is actually showing a lot of resilience. And private equity firms and lenders are definitely getting more and more interested in this segment.
Okay, that's good. That's encouraging.
Yeah.
Because we hear all this doom and gloom all the time.
Yeah.
So it seems like that lower middle market is really the place to be.
Yeah, I think so.
If you're thinking about buying or selling a business, one thing this report talked about a lot was this concept of proprietary deal flow.
Yeah.
And I thought that sounded kind of...
a little secretive.
Yeah, a little secretive.
Yeah.
Can you tell me what that is?
Yeah. So think of it as like getting access to deals before they're even available on the open market.
Oh, okay.
So less competition, more time to do your due diligence.
Oh, that makes sense.
And a much better chance of actually closing that deal.
Okay, yeah, because then you're not in a bidding war.
Right, exactly.
You have more time to think strategically.
Exactly, more time to really dig in and understand the business.
So how do you actually tap into that?
So it really comes down to connections.
Okay.
Really building those relationships with investment bankers, business brokers, anyone who's really plugged into the M&A world. You need to be actively networking, letting people know what you're looking for.
So if I'm new to this, this is where it's important to find those right advisors, the people who already have those connections.
Right.
Now, this report also talked about platform acquisitions. And it seemed like they're making a comeback.
They are.
So what are those and why are they back?
Yeah. So essentially a platform acquisition is where you acquire, a strong company.
Right.
And then you use that as a base to buy up other smaller businesses that complement it.
Right.
And actually, they gave a great example in the report. There was a private equity firm, and they bought a software company that focused on, let's say, scheduling for hospitals.
Right.
And then they used that platform to acquire two more companies, one that specialized in billing and another in patient communication.
Okay, so you're kind of building this.
Yeah, you're building this whole suite of services all under one roof.
Gotcha. So it's not just about buying any company, it's about being strategic.
Exactly.
And does this interest rate cut play a role in that at all?
Absolutely. So lower interest rates make it easier and more attractive for investors to actually borrow that money to finance those acquisitions.
All right, so it's kind of fuel for that.
Yeah, exactly. It makes it a lot more appealing.
Yeah, that makes sense.
So it's definitely a strategy that's becoming more and more popular.
So let's say you're that private equity firm.
Yeah.
And you're looking for that platform company. What makes a company stand out to you?
Yeah, so the report actually did a really good job of outlining the characteristics of a strong platform company.
Person.
So first and foremost, they need to have a really strong market position.
Right.
So they're already a leader in their space. They have a diverse customer base, a history of success.
Right. You don't want something that needs a lot of work.
Right. You're not looking for a fixer-upper.
Exactly.
You want something that's already doing well.
Yeah.
The second thing is scalability.
Okay.
So they need to have systems and processes in place that can handle significant growth both organically and through acquisitions.
So they're not only good at what they do, but they can grow what they do.
Exactly. They can do it on a much larger scale. And then another really crucial point is the management team.
Okay.
Investors want to see a really strong and experienced leadership team in place.
Yeah, because you need somebody to drive that ship.
You need a skilled captain steering the ship.
Especially through these choppy waters.
Especially through these choppy waters, exactly.
And
then finally, they need to have clear growth potential.
Okay.
So it's not just about their past achievements. It's about where they can go from here.
Future looking.
Exactly. So they need to have a clear vision for the future, both in terms of organic growth and their potential for more acquisitions.
So a plan and a roadmap.
Exactly. A roadmap for continued success.
Okay, so we're starting to get a good picture of what makes a strong platform company.
Yeah, absolutely.
And I think it's important for anyone listening, whether you're buying or selling, knowing what investors are looking for can really help you.
Absolutely. Give you a really good insight.
Yeah. So I think this is a good place to pause and reflect. For our listeners out there, if you were evaluating a business, either to buy it or sell it, what are maybe your top 3 criteria that we've talked about so far?
Yeah.
We'll go into more detail and more action steps.
Yeah.
But just for now, let that simmer.
It's interesting you say that about criteria because there was something in the report that was really interesting to me.
Oh, yeah.
It highlighted some data points.
Okay.
About this lower middle market and how it plays a role in the economy. And did you know that businesses in this segment account for roughly 33% of total U.S. employment?
Wow, I had no idea it was that high.
It's a big chunk.
Yeah, that's a big number.
Of the workforce.
Yeah.
So it really just goes to show the impact that this segment has on the U.S. economy.
Yeah.
And what's even more encouraging is that the report found that almost 60% of these businesses expect moderate to substantial revenue growth in the next year.
So they're not just resilient, they're growing.
Yeah.
Okay, so that's good news.
Yeah, that's really good news.
Especially with all this economic uncertainty.
For sure.
So for our listeners out there, it's another key takeaway.
Yeah.
The lower middle market is doing pretty well.
It's a good place to be.
So let's go back to that proprietary deal flow.
Okay.
How do you actually find those deals that are not on the market?
Right. So one thing that stood out to me in the report was the importance of industry specialization.
Okay.
So they found that investors who focused on specific sectors like, healthcare or technology or manufacturing, they tended to have a lot more success with proprietary deal flow.
So you're not just casting a wide net, you're going into a specific...
Right. It's almost like a niche market.
Gotcha.
Within the M&A world.
Okay, so you really got to find those right people.
Yeah.
Okay. So let's say you've identified a potential platform company or maybe an add-on acquisition. What happens next?
Right. So the report mentioned due diligence, and I think it's super important.
Yeah.
So due diligence is essentially an in-depth investigation of a company before you actually acquire it. So you're looking at everything. You're looking at financials, contracts,
everything,
customer relationships.
Like a home inspection, but for a business.
Exactly. It's a home inspection on a much larger scale.
Wow.
And you're really just trying to verify that information that you've been getting.
Right.
And uncover any potential risks or red flags.
So you don't end up with a lemon?
Exactly. You don't want any surprises.
Yeah.
And actually, the report said that over 40% of deals that fall apart during due diligence are because of financial discrepancies or hidden liabilities.
Okay, so due diligence is important.
Due diligence is super important.
Don't skimp on it.
Don't skimp on it.
Okay.
And this is also where having those experienced advisors, lawyers, accountants, industry experts,
team
really comes into play.
Right.
They can help you spot those potential issues.
Okay. So we talked a lot about buying a business.
Right.
What about selling a business? What are some key takeaways from the report there?
Yeah. So one thing that really stood out to me was the emphasis on preparation.
Okay.
So they found that businesses that really took the time to prepare for a sale, like getting their financials in order, documenting their processes, highlighting their growth potential.
So really showcasing themselves.
Exactly. They tended to command higher valuations.
Okay.
And attract more qualified buyers.
Yeah, you want to put your best foot forward.
You want to put your best foot forward.
You want to tidy up the house.
Exactly. You want to make it look as appealing as possible.
Yeah.
And actually, the report had some really interesting numbers on this.
Okay.
They found that businesses that did that pre-sale prep saw, on average, a 15% increase
Wow.
in their final sale price.
That's huge.
Yeah, it's a significant difference.
Wow. Okay, so get your ducks in a row
Get your ducks in a row.
if you're thinking about selling.
Absolutely.
So let's say you've done that preparation and you're ready to sell.
Mm-hmm.
How do you actually find a buyer? How do you find that right person?
Right. So we talked about proprietary deal flow.
Yeah.
But there are other strategies as well.
Okay.
And one thing that the report highlighted was that over 70% of successful lower middle market transactions
Okay.
actually involved an intermediary.
Okay.
So that could be an investment banker, a business broker, a consultant,
Yeah.
someone who can help facilitate that connection
Okay.
between the buyer and the seller.
So it's not always about, picking up the phone
Exactly.
or waiting for someone to find you.
Right.
It's about having someone who can make those intros.
Exactly. Someone who can navigate the process.
Yeah.
And they also mention the importance of your industry network.
Okay.
So attending conferences, networking events, even just reaching out to colleagues and contacts
Yeah.
can really open doors to potential buyers.
So it's a combination of things.
It is.
Putting yourself out there and having that network.
Exactly. And remember, those relationships take time. It's not about just like trying to force a deal. It's
Yeah.
about really cultivating those genuine connections that can lead to, mutually beneficial outcomes.
So whether you're buying or selling,
Mm-hmm.
it's about having those right people
Absolutely.
and those connections.
For sure.
So we covered a lot of ground.
Yeah, we did.
What do you think are some of the big takeaways for listeners?
Yeah.
Especially if you're thinking about buying or selling a business.
Mm-hmm. I think one thing that's really important for anyone in the lower middle market to remember is that it's not all the same.
Right. It's not one size fits all.
Exactly. There's a lot of variation within this space.
Yeah.
And actually, the report even highlighted
Okay.
some key differences between, let's say, those businesses in the lower end of the market,
Okay.
those valued at 2 to 10 million
Okay.
versus those in the upper end, the 25 to 50 million.
Oh, interesting. I could see how those two groups might.
They definitely face different challenges and opportunities.
Yeah.
So, for example, businesses in that $2 to $10 million range,
Yeah.
they're often more focused on organic growth,
Right. They're still in those early stages.
Yeah, they're building their foundations, establishing their brands, and
Yeah.
maybe haven't even thought about acquisitions yet.
Right.
Whereas businesses in that $25 to $50 million range,
Yeah.
they might already have some experience with acquisitions.
Okay.
And they're really looking for those strategic ways to accelerate their growth
Gotcha.
or expand into new markets.
So if you're a listener, it depends where you fall on that
It does.
spectrum to really know what your strategy should be.
Absolutely. And the report also highlights
Okay.
some key trends that are impacting the lower middle market
Okay. What?
as a whole.
Yeah.
So one thing that really stood out to me was the increasing role of technology in these M&A transactions.
Okay.
So more and more businesses are using these online platforms and these data analytics
Yeah.
to identify potential targets, conduct their due diligence.
So technology is kind of streamlining this.
Yeah, it's making it a lot more efficient, a lot more transparent.
Makes sense.
And this is particularly relevant for the lower middle market.
Yeah.
Because sometimes resources and expertise are a bit more limited.
Right. It kind of levels the playing field a little bit.
Exactly.
Yeah.
It gives them access to those tools and insights
Right.
that maybe weren't available before.
Yeah.
Another trend that they highlight
Okay.
is the growing importance of ESG,
ESG. Yeah, we hear that a lot.
environmental, social, and governance factors.
Okay, but how does that relate to buying and selling a business?
So investors are really starting to look beyond just those financial metrics
Okay.
when they're evaluating a company.
Right.
So they're also considering, the target company's environmental impact,
Okay.
their social responsibility.
So they're looking at the whole picture.
Yeah, they're looking at the bigger picture.
Yeah.
And this is a trend that's only going to become more prominent.
So you got to start thinking about it now
You have to start thinking about it now.
to future-proof yourself.
Exactly.
Okay, so we covered a lot of information.
We did.
If you're a business owner and you're thinking about buying or selling,
Yeah.
what are 3 things you should do right now?
Okay, so number 1,
Yeah.
get educated.
Okay.
Take the time to really understand the dynamics of the lower middle market, the key trends.
Do your homework.
Do your homework.
Don't jump in.
Understand the valuation drivers, the potential risks and opportunities.
Yeah.
Number 2, build your network.
Okay.
Connect with those advisors, investors, industry experts, other business owners.
It's all about the people.
It's all about the people.
Okay.
And number 3, be prepared to adapt.
Yeah.
The M&A market is constantly evolving.
It is.
So be flexible, stay informed.
Right.
Be ready to adjust your strategy.
Stay agile.
Stay agile.
This was great. This was so informative. Thank you so much for joining us.
It was my pleasure.
And for our listeners out there, we hope you'll learn something today about the world of M&A in the lower middle market. And remember, whether you're buying or selling, or even just exploring the possibilities, having the right knowledge and the right team can make all the difference.
Absolutely.
Until next time, keep learning and keep growing.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.